So, moving on to the next thing that I wanted to talk to you about, can you give us, because there are going to be a lot of people that are listening to this that are coming from my world, which is more of like the ethereal world, because I'm very into like spirituality, consciousness, that kind of thing. And I am like grounding down more into money related things. So this will be of interest to those people. But for those people who have like no idea what's happening right now with the financial markets, can you just give a just talk about that a little bit because it has been kind of significant, the events that have been occurring over the past, I don't know, little while, especially over the past few weeks.
Well, yeah. I mean, really, it started quite a while ago, but it's really ramped up in the past few years, anyways.
Yeah.
So
And
I
I
can give you a quick overview, at least how I see it.
yeah, and I kind of want yeah, okay. I'll just I'll let you take the reins and then I'll ask questions. But I
Yeah,
think that
stop me whenever something doesn't make sense or you want me to elaborate.
yeah,
Um,
but the reason I really want to bring this forth is because in terms of the theme of this podcast, like what's happening with the financial markets is such a big indicator that things are shifting in our world, like at a really deep fundamental level, because money is what moves everything. Like every people, like so much of what is created in this world, like underlying it is the intention to increase resources, and like the flow of money kind of underlies everything that happens in the world, including all the global events that we see. And so whatever is happening right now, it's just very interesting, and it's going to be very interesting to see where it goes. But yeah, start with the overview and then I'll ask you questions and I'll get comfy.
okay. I don't know how far back I want to go, but I guess we can start with um, 2008. So in
Okay.
2008, there was a big financial crisis. There's lots of movies that have been made about it. Um, you can look some of
Really,
those up to get more details, but
like The Big Short, right?
yeah,
Yeah,
yeah.
that was a good one.
So essentially, I won't go into the full details because it'll take way too long, but there were problems in the financial markets to do with banks and essentially the housing market. And what happened was the government decided uh, to kind of bail out those banks. Um,
Can
Not
you
all of
talk a
them
little
got bailed
about
out.
like what do you mean by bailing out?
Bailing out basically means so if something is going to go bankrupt,
Hmm.
right? Uh, Bailing out would be giving them money so that they don't go bankrupt.
And so for those of the people who are like very new to this, what how do banks even make their money? Like what is the money that the banks spend?
Sure. So so the banks traditionally make their money from uh, basically making loans on their deposits. So as an individual, you deposit your money in the bank, and then the bank's job is to then take that money and loan it to other users of the bank so that those people can take that money and build something useful in the world
So
with
it's a
it.
Ponzi scheme.
Basically. Um, so yeah, so banks take your money, they hold it for you. Traditionally, they give you some amount of interest for holding your money. Interest is like a payment to you for holding your money. So let's
Hmm.
say they give you a 1%. They're not doing that now, but let's say they give you a 1% interest rate. So
Hmm.
over whatever period that interest is over. So let's say it's over a year. If you put in $100, you'll have $101 at the end of the year. Okay,
They pay you a
so
dollar for every if they were paying a 1% interest fee, they'll basically pay you a dollar for every hundred
$100
dollars that you keep in the account
in the
for a
bank.
year. Yeah.
That's right. And then if you keep it in for the next year, now you have the interest being applied to the $101. So you
Hmm.
get a little more and more and more. It's compounding over time.
Yeah.
Okay, so they take your money and they lend it to other people in order to make money. That's their business. Their entire business is to find people that might be able to make use of that money, so that it's not just sitting there doing nothing. Because so you always want to invest your money, and they're basically doing it for you. So that's their job. And essentially, what happened in 2008 was that they basically gave out mortgages. So, like, most people know what a mortgage is. A mortgage is you basically go to the bank, say, I need a loan so that I can buy my house. Right. And then the mortgage has an interest rate associated with it. So as the buyer of that house that takes on that loan, you have to pay back that loan, the principal plus interest, meaning so if your house cost $1 million, you take a $1 million loan, you buy the house, but now you have to pay back that loan plus whatever interest was on that loan. So you'll end up paying more than $1 million for that house. And that difference between the $1 million and whatever you end up paying after you pay down all the interest is the money that the bank makes.
Yeah.
So essentially what happened was a bunch of details, but the whole system collapsed because of these financial instruments that kind of covered up the credit worthiness of the individual taking on that loan. So basically they gave out loans to people that couldn't afford them.
Yeah.
And it wasn't clear to the bank. I mean, obviously certain people knew that this was happening, but the broader financial markets did not understand what was happening. And so it all basically came crashing down.
Yeah, and if you want to really understand the details and what happened with it, that movie that we just mentioned, The Big Short, with Ryan Gosling, I think, that's a really good movie that is not super dry. Like, when I first watched it, I didn't know anything about the financial markets, and I was like kind of intimidated to watch a movie about a financial market crash, but they do it in a way, it's like a Hollywood movie, so they do it in a way that's very accessible and easy to understand. But yes, continue.
There's quite a few good movies about it, documentaries and all that sort of stuff. So anyways, the markets came crashing down. The problem is that the banks, where everyone has their money, if those crash, nobody has any money. So it's a big problem, right? It's like if you stored your money in a house and the house burned down, like that's a huge problem. So they want to make sure the house doesn't burn down.
Yeah, but also then people had money in the banks, but the bank had loaned out. So if I like put $100 in a bank, and then the bank had used that $100 to give it to someone else to make more money off it, basically.
Right.
And then they lost that money. And so
basically,
then the bank came back to me and was like, oh, we don't actually have your $100 anymore that you put in here that you thought was sitting there. Yeah.
Yeah. It's like at some point they realized that they weren't getting their money back.
Yeah.
And so that's the issue.
Yeah.
Because all it takes is for those house prices to start coming down, and then you realize, oh crap, I'm not gonna get this back. So anyways, that whole system crashed, and the government had to do something about it, because otherwise the economy would basically collapse because of these risks to the banks.
And what does it mean when people say the economy will collapse? I know that's a very deep question.
So I can give you a specific example. It's kind of related to what's happening now more so than back then, but there's lots of ways an economy can collapse. But essentially, I mean, in the case of 2008, it's like if everyone lost all their money, then no one can buy anything. Therefore, no one's buying anything. If no one's buying anything, people will stop making things to buy, because why would you make it if no one's going to buy it? So then basically the system degrades like that. Or it could be a collapse in terms of like your purchasing power. So in the case of something called hyperinflation, which has happened in lots of countries all around the world. And it um, basically your money becomes worthless. So even though you might still have $1 million in the bank, if your $1 million, it could become so worthless that you can only buy like some bread with it or something like that. Yeah.
Yeah.
So there's lots of ways that economies can collapse, but essentially it's when, I mean, you can ultimately think about it in terms of, are people still transacting with each other? If people aren't trading still, then the economy's not working.